Hello investors and traders, today I'll speak about the recession 2023 in US, the probability of recession, the interest rates, of course the US indexes, but the main topic for today is recession 2023. So in tradition, let's start with the S&P 500, my view on this index. So here since 2014 in my mind it was the first wave, the second, the third. Here it was correctional one and the fifth. So by the way, it was the impulse, the first, the second, the third, and the fifth. Then the correction is finished, and now we are in a correction. By the way, I think it may be this pattern earn A, B, C, wave A, B, and C, and another move down. But now it's just the wave A, so it's a decreasing channel and it's a expanding leading diagonal. So it's the first wave, the second, the third, the fourth, and the fifth. And here in this pattern I'm expecting another move down. So I'm expecting to see the fifth wave, and in my mind it will be the target of for the correction. It will be maybe 33, 32.00 for S&P 500. Of course, the interest rate. Why the interest rate? The Fed fund rate is now 4.75%. It's expected to elevate it at the next meetings. The Fed, and the inflation. The U.S. inflation is now more than 6%. Of course, it's a lot. So those issues. I think the main problems for the stock market has all. Let's move to Nasdaq, the Nasdaq index. So here it's about right about 12,000. So we see here a few support levels. It's 11 and 700, 11,000 and about 10,000. So here also it's the reasons are the same. We see that the Fangman, all the Facebook, Apple, Google, the season of reporting, the last reports not was they weren't so impressive. So here it's very hard for those companies to grow. Of course, the high interest rate and the inflations can be the main reasons why I'm not expecting a very strong stock performance in this year. Let's have a look on this chart. We see the growth expectations for the S&P 500 companies on the long term are continue to decrease. So very weak performance, very weak expectations for the grow for these companies. The earnings of core, and the P ratio. Please look, it's still very important. I guess it's one of the main important chart for today's video. It's data from the Ardeni Research and Bloomberg, of course. So now the P ratio of S&P 500 about 20. The average, I guess it's about 15-16 historically, yeah, for last 15 years. So here, for example, we see it was a great chance, it was great time to buy stocks. It was the market crash in 2018, it was the corona crisis, also it was about 15 the P ratio, but now it's 20. I don't think that it's cheap at all. Of course, the same time we see in the expectations collapse, yeah, here. So it's hard for me now to buy growth stocks. That's the reason why I prefer buying dividend stocks like Philip Morris, like AT&T. So just if you look at this chart, you may understand, and maybe it can help you to make some investment decisions. So if we were here, for example, 15, 16, 17 P ratio, so okay, great time to buy stocks. But now, when we were even here above 30. Of course it's a lot, it's very expensive market, very expensive stocks. I remember when Apple and Google they were more than 30, the valuation of PE ratio really were than 30, so it's a lot. Now it's 20. It's of course it's cheaper, but it's actually the same level as the pre-corona virus period. So I would like to see maybe 18, 17, 16 to start to heavily buy stocks. It's my opinion for the stock market. I remind you that in my channel I had a lot of videos about stock market, dividend stocks, passive income, and of course best investment for this year. Let's have a look on the data for the next FOMS meeting. It will be in 23 days from now. It will be the 22nd of March. So probability of hiking is 78%. The current rate is 4.75, but expected to be about 5%. So it's very high probability. It's out of question that the interest rate will be increased. So it's another it can be another pressure on the stock market. But the next meeting also we see here another hike the probability of the investors and traders, of the analysts, that the 75% probability, 75% that the interest rate will be hiked another time, and then the interest rate will be 5.75. So the elevated interest rate can create another pressure on the stocks. So I think now it's very hard to see the stock market to show grow. Let's move to the oil price. So here I think, in my mind, of course it's my opinion, it was the first wave, the second, the third, the fourth, and the fifth. So we may see another move in the fifth wave, and it can be higher than the third one. It's in this case we may see the stock price, not the Brent oil price, is higher than $120. I don't know what will be the reason, what will be the case, but from the technical analysis standpoint of view, using the Elliott waves, we may see another bounce in the Brent oil price. The B2C, the Bitcoin, so it's one of my big bets for this year. I have a position in this asset. So here my target is still 30,000 for this year. So in this case the potential to grow is about 30% up. Now we already the performance about 44% since the beginning of the year. I think it's quite nice profit, but still I'm see a potential to grow in this asset. The DXY, the index dollar, we see 104. So of course the interest rate may continue to be raised, but then I'm expecting to see this the index dollar is weaker than $100 towards the end of this year. And the TLT, the ETF on US Treasury bond, of course I have position in this asset in my portfolio. So my target is 120. In this case we have a potential to grow about 20%. The TLT and the US Treasury is one of the safest asset in the whole market. Both stocks, equities, and the bond, of course, the global markets. So I know we here see the yield for the 10-year already about 4%. So you may receive a dividend if the performance itself won't be so impressive, but still you may receive here a dividend yield about 3%. I think it's quite nice. But here I'm expecting to see, of course, the TLT much higher. By the way, pay attention to the RSI, the momentum indicator. Now on the monthly time frame it's 33, so it's telling us it's already oversold. So why not to try a very safe and to add very safe asset to your portfolio. By the way, such low momentum we didn't see for the last I guess for the last 20 years. So it's another argument why we may add this asset to our portfolios. So TLT, watch out of this. I think it can be a very nice asset for this year. And don't forget about the dividend. If you're dividend investor, if you like passive income, to receive passive income, we may still have nice dividends. And of course, the inverted yield curve, it's another reason why we want see the stock market to grow. Look, the 10-year yield is about 4%, but the 2-year treasury yield is 4.8. So the long run is higher. So we see the short run risks are much higher than the long run. So it's called the inverted yield curve. It's it's a red flag, by the way, and it's the leading indicator for a recession, that we may see a recession in the in the next 12 months. So of course it's a big problem for the stock market, for the companies. So that's why we may see a real recession in this year, or maybe we are already in a recession. Just the government and all the other authorities will tell us that we look that data we received last quarter signaling that we had a recession. There is a high probability of such scenario. But so generally speaking, what I'm thinking about the recession, that now we have three main problems. It's the high interest rates. All the central banks in all the countries, the global central banks continue hiking, continue to increase its interest rates, and of course the Fed now it's about 5%, and he may hold it high interest rates even higher than 5% towards the end of the year. So it will be very hard for the company to raise money, to raise investment. So I think the first red flag. The second is the inflation. So the inflation here, for example, in Europe, we see that the core inflation is continue to grow. Now it's more than 4%, so it's still a lot. And the headline inflation is maybe beginning to slightly decreasement, but still it's above 8%. I remind you that core inflation is the inflation without food and fuel price. And we see that the target, the goal is 2%, but 8% it's in 4 times higher than 2. So of course the inflation in the Eurozone is continue to be very high. So if you like this video, don't forget to press the like button, of course subscribe to my channel, and see you on the next time. Bye.